This video covers Tokyo Electron's second quarter financial results for FY 2026 from April to September 2025. Tokyo Electron, or TL, is a leading manufacturer of equipment for semiconductor and flat panel display production. Tokyo Electron provides machines for processes such as etching, coating, and inspection. In the second quarter, net sales reached 630 billion yen, a 14.6% increase quarter over quarter and in line with guidance. Operating income increased, while the operating profit margin fell to 25.1%, mainly because of higher development expenses. Net income rose by 5.1% to 123.8 billion yen. Capital expenditures increased, primarily for the construction of a new production building at Tokyo Electron Miyagi and a new development building at Tokyo Electron Kyushu. It was overall a good second quarter financial result. For the first half, from April to September, overall results exceeded expectations in most areas. Net sales reached 1,179.6 billion yen, up 5.2% year-over-year but down 9.9% from the second half of FY 2025. SG&A expenses increased, reflecting higher development and operating costs. Operating income decreased 3.4% year-over-year, and the operating margin declined to 25.7%. Net income fell 0.9% to 241.6 billion yen. R&D expenses rose year-over-year, showing continued investment in next-generation technologies. Capital expenditures also increased, mainly for new facilities in Miyagi and Kyushu. Overall, the first half of FY 2026 showed steady performance with better-than-expected sales and ongoing investment in future growth. In the second quarter, sales in South Korea accounted for 21.1% of total sales, up 5 percentage points from the previous quarter, showing stronger demand from Korean customers. Sales in China made up 40.3% of the total, remaining the largest regional share. The high proportion in China reflects a pull forward in customer demand that was originally expected in the second half of the fiscal year. The global wafer fab equipment (WFE) market in calendar year 2025 is projected to reach $115 billion, consistent with the previous forecast made in July. Investment in mature nodes remains soft, but NAND investment has started to recover after a period of weakness. The main drivers of growth are advanced logic and DRAM used in AI applications, as strong AI server demand and rapid semiconductor innovation continue to accelerate investment in cutting-edge technologies. DRAM is a type of memory used for temporary data storage to support fast processing in computers and other devices. NAND is a type of flash memory used for long-term data storage in devices like smartphones and SSDs. For DRAM, both HBM high-bandwidth memory and general-purpose DRAM are seeing sharp investment increases, with double-digit growth expected to continue in the coming years. NAND investment is also rising, supported by growing demand for SSDs used in data centers, which is improving factory utilization rates. In the logic sector, investment is expanding as device scaling advances toward 2nm and 1.4nm nodes. Demand for advanced packaging and testing technologies is also increasing steadily. Meanwhile, investment in mature nodes is expected to stay at around the current level. Overall, these trends are expected to drive the WFE market to a record high level in calendar year 2026. With continued growth in demand for high-value-added and advanced semiconductor manufacturing equipment, Tokyo Electron is well-positioned to capture growth in the expanding semiconductor equipment market. The company offers a broad range of technologies, including front-end process tools, 3D integration equipment, and testers. With the global semiconductor market expected to reach $1 trillion by 2030, Tokyo Electron sees many opportunities across advanced technology fields. For etching tools, demand is increasing with greater HBM investment, and cumulative DRAM interconnect sales are expected to exceed 500 billion yen by 2030. Sales of 3D integration tools such as bonders and lasers are also projected to surpass 500 billion yen. Tester demand, especially for AI and HPC high-performance computing probers, is expected to grow rapidly with an annual growth above 15% from 2025 to 2030. The company is also developing new products like dye probers and PECVD, plasma-enhanced chemical vapor deposition, systems for gap fill, each expected to capture about 10% of their respective markets. Tokyo Electron has revised its full-year forecast upward, now expects net sales of 2,380 billion yen, with a gross profit margin of 45.3%. In the third quarter, the company sold a portion of its shareholdings and recorded extraordinary income from those sales. Reflecting this gain, Tokyo Electron raised its full-year net income forecast by 44 billion yen, bringing the new estimate to 488 billion yen. This revision demonstrates the company's solid profitability and the positive impact of its strategic asset management. The dividend forecast for FY2026. Reflecting the upward revision in financial estimates and the gain from selling a portion of its shareholdings, Tokyo Electron plans to pay a full-year dividend of 533 yen per share. The company maintains a dividend payout ratio of 50%, meaning half of its net income is distributed as dividends, and maintaining a minimum annual dividend of 50 yen per share, even during challenging business conditions. Tokyo Electron also plans to flexibly consider the possibility of conducting share repurchases to enhance shareholder returns. Stock price. This chart over the past year shows the stock price in Japanese yen at 34,180 as of October 31. This chart shows the stock price in US dollars at 110.7 as of October 31st. After the earnings announcement, the US dollar ADR stock price rose more than 3%. Semiconductor-related stocks have been performing well recently, supported by strong earnings from GAFAM and rising Japanese stocks, driven by expectations for the new Prime Minister Sanae Takaichi. Current PBR is 7.92 and PER is 32.1. Dividend yield is 1.56%. Compared with historical PBR, PER, and dividend yield, these figures suggest that the stock price is relatively high. It feels like semiconductor stocks have become a bit expensive after their sharp rise, driven by strong momentum. Conclusion. Overall, Tokyo Electron delivered strong first-half results. The company revised its full-year forecast, although net income is still expected to decline compared with last fiscal year. Strong demand in the AI-driven semiconductor market positions Tokyo Electron well for continued growth through FY2026 and beyond.